Hi, this is Neil Frankel with WealthPilgrim.com. Today we are continuing our conversation with Jake and Allie, who have been the kind participants and willing participants, some people say guinea pigs, for the consumer commentary financial planning segment we've been running through this entire year. Jake and Allie, are you with us today?
Yes, we are.
Cool, okay. So today what we're going to do is talk about health insurance, the exciting world of health insurance, because for the audience at home, just to refresh your memory, Jake and Allie are going to be retiring early, right? And how old will you both be when you retire?
The goal would be hopefully for me around 52 or 53, somewhere in that range, and that would put her about 47 or 48, I guess.
Okay. So first I want, good, so you obviously you don't have the typical health insurance plan that many Americans do. So first, tell me a little bit about the health insurance plan that you currently have in place.
Since we both work for the same company, it's the same plan. We're both under a single plan. We have prescription, eye, cancer. That's about it. Dental.
Please go ahead. Sorry.
Yeah, that's the major things that are covered under our insurance.
And are you happy with the plan that you have at work?
Yeah. I don't really have any issues with it.
Okay. And so then my next question is, what are your plans for when you retire? What are you going to do?
Well, we've looked at some of the different plans you can buy. We did a year or so ago. That's the biggest concern as to when we can actually retire, because that's the most expensive thing we're going to have to deal with.
So, in your investigation, first of all, where did you even look to find plans that are basically you've got to go private, right? You've got to buy private insurance, right?
Correct. And we were looking at. I'm sorry.
No, please go ahead.
We were looking at the North Carolina. They have this thing where you can buy different plans, and someone we were working with went through and showed us how expensive those were going to be for the similar coverage that we have right now.
Okay, and I guess you wouldn't consider getting catastrophic coverage until, let's say, you were in your 60s, so then you could get Medicare, right?
Correct.
So, but have you considered? I mean, are you both healthy?
We are.
So have you considered getting something that would be catastrophic only, so that you would pay for out of pocket until you were, Medicare eligible?
We haven't actually considered that. I didn't even really know that there was a thing that you could just get catastrophic.
Sure. It'll be much cheaper. But, okay, so then I have another question. Have you looked into the Obamacare?
That was one of the options we did look at.
And was that an option for you? Was that attractive, or what were the pros and cons of that for you?
When we looked at it with the person that was helping us for North Carolina, the prices were even higher than if we got it through just a private company. So it really wasn't a good deal.
Okay, so basically you're thinking about, now just to remind our audience, my experience with you both, and by the way, I'm similar, you don't like to take chances, you're big planners, right? You're planners?
Definitely.
Okay, so the last thing you want to do is leave your health what people who are planners and who like to control the outcome, the last thing they like doing is leaving health insurance sort of up in the air a little bit. However, having said that, you might want to take the chance, play the odds a little bit. If you're both healthy and you have good health in your family history, look into catastrophic illness only. It'll be much cheaper, and then you can possibly switch over later on. But so you had not considered that, or you had considered it and said no, that wasn't an option because emotionally that's not a good fit?
I would say that we hadn't considered it because we didn't know about it, and in just a few minutes talking about it, it's not something that we would probably consider because A, it's too risky, and B, both of our families don't have the greatest health history.
Okay, I got it. Okay, so what I hear is that you're going to go with the private insurance, and have you decided on what kind of coverage you're going to get?
Honestly, we haven't at this point because I'm hoping in 2016 things change, and a few more years down the road that the healthcare system will, some of these things will be changed, let's say.
Okay, are you going to delay your retirement as a result of that?
Well, we're not planning on retiring in the next 2 or 3 years. I'm hoping that something happens after the next election and they do something better with the healthcare.
Okay, so then let me rephrase my question. What if nothing changes, though? Would you still retire, or would you wait?
I think we would probably still try to. We just have to look at the numbers of what the current costs are at that time. I mean, if it's a year or two, it's not that big a deal, really.
Understood. Okay. So how much money are we looking at in premiums for you guys?
It's like $2,000 a month or $2,200 a month, depending on how. It could go lower, it could go higher, depending on what quality of services you got.
Okay, and so is that in your budget? Did you budget that amount for your retirement health insurance?
Yeah, I think we're okay there. I would prefer it be a little bit less than that, but I mean, I've known about this cost for a while. So it's planned.
Okay, all right. So basically, what you're saying is, even if it's $2,000 a month, you're good with it. It won't stop your plan. It won't stop you from executing your retirement plan. At the worst case, correct?
Correct.
Okay. So what I like about what you've done here is, number one, you've investigated your options. Number two, as painful as that $2,000 a month will be, you may not be able to do much about it. So you factored that in and you built your plan around it and you've taken appropriate steps. What more can you do?
Exactly. Unless you roll the dice and just play with the catastrophic.
Well, I'll tell you one thing. What you might want to do is you might want to look, and I'm not a health insurance specialist, but you might want to look at either a catastrophic or a high deductible policy, whereby you would pay the first maybe $5,000 or $10,000 or $15,000, and then the coverage would kick in at that point. Have you looked into policies of that nature?
We actually have not done that, but that's something that would be more. That might help a lot.
Yeah, I would look into that. And by the way, the person that you spoke with, was that person a captive agent of an insurance company, or
they were not?
Just a broker?
They were. It was actually a financial person that was helping us, and they were able to look at the cost based upon the area that we were looking at retiring to.
Okay, well, you again, this is an area that I don't have expertise in, but I do know enough about it to ask the question. So you might want to get a second opinion, because a good financial advisor, in my experience, would at least raise that as an option.
Mm-hmm.
High deductible for healthy. If at least you are both healthy, maybe there's some health issues in the family, but remember, we only need to get you up to 65 where you can qualify for Medicare.
Exactly. The other thing we've actually considered or looked at is if we don't retire in the United States. I've been reading a lot about retiring outside the United States, and the healthcare cost there is tremendously different.
Where are you thinking about? Because I might want to come and visit you if it's someplace nice.
I don't know that we've picked a place exactly, but we've been reading. I've been reading a lot of articles about people that have retired to South America or somewhere in that area, also over some places in Europe.
Right. Well, I don't know anything about that, but I hope that you'll let me know when you do find out, because I got my suitcase right out the door, so it's no problem.
I think I'd have to choose Europe over South America.
I'm sorry?
So I think I would have to choose Europe over South America.
I can understand that. I can understand that. I don't know. I think Italy should be pretty nice, but I don't know about the healthcare system there.
That would be very nice. That would be my top choice.
That would be my kind of choice, too. Okay, listen, what we'll do then, I think we can wrap this installment up. Basically, what's important to take away for not only you, but for the people who are watching this broadcast, is your process. You have a unique situation, and usually everyone has a little bit, your situation is more unique than most people, but everyone has little nuances that make their situation a little different from most other people. So you want to, number one, be very aware of really what you want to do, which you've been clear on all the way through. Number two, you want to talk to people who, A, are experts, and B, who don't have a vested interest in any one plan. So you want someone who's got a lot of tools or books on the shelf to draw from. Not just one or two trick pony, but many ideas, and that they would think outside the box, think about high deductible, especially if you're healthy. That's something to look at, because it will really drive your costs down. But you want to also measure the risk, and you've done that. But at least find out more about that. And I think the process is more important than necessarily what the decision is. So if you have the right process, you can always, you'll learn about the right options and the various options, and you're fortunate in that you have a lot of time before you have to make a decision. You know the worst case, probably it won't get worse than that by the time you retire, hopefully much better. But look at these other options and make sure you talk to maybe some other people besides this one person, because they really should have brought up this issue of high deductible or catastrophic.
Okay. Yeah, and he may have. It's been a couple of years since we talked to him, or talked to that person. It was from from a company.
Right.
So he may have, and I just didn't catch it or didn't write it down or forgot.
No problem. No problem. Okay, good. So what we'll do is we'll meet next month, and I've got a few tricks I want to bring out. I want to talk about a few other items that may be very helpful. I think we've so far we've spoken about financial planning and income and investments, and we've given you all the education around that, and we've talked about how to get your situation lined up correctly. And now we talked about health insurances, and it would be irresponsible then to say, okay, now you have all the information going your way. We're going to start wrapping things up. We've got a few more meetings left, and I want to try to bring it all together to make sure that this can be a life-changing event for you, and put you on a solid path for the future, and also for the people at home that have been watching these series. So we'll talk next month. But I want you to hold on. Don't hang up, because I want to schedule our next meeting. Okay?
Okay. Thank you so much.
Thank you.
All right. Say hi to Griswold.
Okay.
All right. Bye.
Bye.
For more great ideas on how to have no money worries no matter what, come on over to wealthpilgrim.com, sign up for your free weekly updates, and get a free e-course on how to make better investments.